Ovintiv represents a compelling value opportunity. The stock is selling at about 4 times next year's expected earnings and is generating a free cash flow yield of around 17 to 18%. This free cash can be used for multiple items. They're buying back significant amounts of debt every year, increasing the strength of their balance sheet. They are repurchasing about 7 to 8% of the stock each and every year, and the remainder can be used to further increase the balance sheet through cash or to increase the dividend. This is an unbelievably cheap stock, and the fact that they're repurchasing shares is allowing it to compound itself with its value. This is a compelling opportunity, in my opinion. Ovintiv is an exploration and production company. They are the combination of Newfield and Encana. They are now domiciled with their headquarters in the United States in Denver, Colorado. They trade on the US and also on the Toronto Exchange. Ovintiv is incredibly cheap for a couple of reasons. The first, as with most exploration and production companies, they went through a near-death experience last year during COVID. When the price of crude oil briefly ticked near zero, these companies were bleeding cash and bleeding money. They barely made it through that period. This still is in investors' minds. The other item is investors are often looking at things through a carbon-free lens. And clearly, an energy company producing oil and natural gas is not carbon-free. There are lots of investors now who are avoiding the area, and these stocks are in general very cheap. The other item that people are concerned about, making it very inexpensive, is what is the longer-term case for crude oil and natural gas. On the first item, crude oil is primarily a transportation fuel. It powers your cars, trucks, and also airplanes. This is its biggest use. Clearly, electrification of cars and trucks is going to put a dent in this demand area. This will take decades to accomplish. The other area where Ovintiv produces a lot of product is natural gas. Natural gas is a clean burning carbon fuel that does not emit a lot of areas that dirty the air. It's very clean burning, but it does emit carbon dioxide. So this is a negative for the natural gas. But natural gas is largely being used to replace electricity production as opposed to using coal, which are being decommissioned and shut down. We're trying to build out more and more renewable electricity generation capacity, whether that's solar or wind, but those are highly inefficient and take up lots of land space. Natural gas electricity generation is going to continue to be a very important means of electricity generation, not only in this country, but across the world for the foreseeable future. We are not really worried about the demand profile for natural gas. On the crude oil front, the concerns over the longer-term demand for crude oil has made it so that there's not a lot of investment taking place. The lack of investment means that there's less production coming on, meaning the people who are producing are receiving a better price. Hence, the cash flows are very strong, and they do not have to use a lot of those cash flows to reinvest to increase production. This helps make their cash flow generation extremely high, their free cash generation extremely high. As long as the world is concerned about the 15 to 20 year profile for crude oil demand, and there's lack of investment in the sector, either because of ESG pressures or concerns over demand over the longer term, this area should continue to be attractive for at least another decade and probably 2 from the investment profile. We think Ovintiv represents a rare opportunity here. The stock has pulled back from over 40 to under 35. It is a very well run company. The merged companies are squeezing out inefficiencies, reducing costs, increasing cash flow. They have a very nice resource base to develop and produce crude and natural gas for the foreseeable future. We think this is a good long-term investment. With the 17% free cash flow yield being used to benefit shareholders, this stock will be able to provide shareholders with value even if it's not revalued from its extremely low 4 PE today to a higher PE. But if we have to wait and the company has to do it itself, at these levels, with this free cash flow generation, they will be able to help shareholders out and drive the stock higher on their own. This is Benjamin Halliburton. Please see our disclaimer on buildingbenjamins.com and see our full report on Ovintiv. We appreciate your time. Have a great day.